So they just released the interest rate, and the general anticipation was that it was going to be not changed this time, that they were going to keep it where it was. But they raised it another quarter point. So the Fed is saying that they view inflation as an issue still, right? Their target was 2%. CPI came in at 4%. So they're still very serious about attacking this inflation. So one thing that I also want to add to this, well, as far as not just the technicals, but
Cool. I'm about to start in. Even one.
so sorry, y'all. So one of the cool things about that is, yeah, all the low resistance liquidity runs that happened, Euro ran all the way up and down. So did you. So one thing that I want to note about all this, when it was like one night I was just on the Federal Reserve's website, and there was an article. I can't find it right now. I'd have to look it up. But there was an article where the Fed did a study of interest rate decisions. And what they found was that the algorithms for the large banks turn on 30 minutes after the interest rate release. I don't have the exact article right now. I could pull it up real quick. Let me see. I'll pull up the Federal Reserve website. So I'm pulling up the article right now, but I expect this to keep dumping it, like I said, at least for the next 30 minutes. We're only 5 minutes in. Wow, AUD too. How many pips was that off the 20 day? Wow, 28 and a half. And then gold, same thing. That low resistance liquidity run, it hit on almost every single pair. That was the order block right here. Is that on the 1 hour? 4 hour. This was a 4 hour order block here on gold. So this one here, that was the 4 hour order block, and right here was the mean threshold. I'll make that one dotted. And again, so why do I think gold is going down, right? And then look at dollar. So dollar's going up, which is going to push gold down. But think about inflation, right? Inflation came in at 4%. So gold is not going to be as valuable right now, right? If inflation isn't going to be at 12, 15%, if it's at 4 right now, at least from how it's looking at this very second, gold does not look as valuable right now. And that trend should continue because this has been kind of like not a shocker, but it's making headlines. It's going to be in investors' minds that inflation is not as bad as they said it was going to be. But we'll see. And again, this is that inside week is still inside that previous weekly high and low. And if it runs this low, we'd be breaking out of that inside week. So what we generally want to see is either it takes the low and then completely turns around, takes out the high, or you'll see like a retest right here. And there's UCAD. That's nice. Well, you know, oil oil ended up being pretty nice too. And so while we're here, I'm just trying to hang out till the algorithms kick on, like I was talking about, and I'm gonna post that link to that article too. But I just kind of want to talk about order blocks and not only the theory to them, but kind of how they work. So, everyone I feel like gets confused about order blocks and feels like they're pretty complex, but I want to explain it in a way that like kind of makes better sense. So order blocks are really it's just a specific level of structure, right? That's all it is. It's a certain level of structure. Now, whether it's bullish or bearish is however we define that structure. So like right here, you can see all this price action right here. This is actually a 4 hour order block. So let's talk about that. So right here, We made the high of the week on Monday, dropped down Tuesday, then we traded back up, and you see we made this lowest down close candle in this range. And there was a triple bottom right here with a completely open gap right here. And so it trades up into that gap, fills it, and then basically rejects. So now I want you to pay attention to this 4-hour order block. What we expect from an order block, right? So if it's a bullish order block, it's a red candle, is we expect it to trade out and then come back into it and then trade away, right? If you're familiar with order blocks, you probably have a good understanding of this. And then right here would be our mean threshold, which is just 50% of the order block from body to body. So in the event that this order block fails, right? So it comes back down and it breaks through the mean threshold and breaks through the low. This is just a specific level of structure. So a lot of times what you see, this candle that was an order block, and this is going to take some time, but if you study this, you'll really see what I'm talking about. This bullish order block, a lot of times will come right here and then trade down. It uses the old level, right? Support for this order block then becomes resistance, right? So again, let's look at it. This 4-hour order block right here, there it is. So this was the 4-hour order block. This was the body. So the body looked like this, right? And then it broke through. It traded up, back into it, and then traded away into the liquidity, broke down. And then look, once it broke that order block right here, you see where it fails? They break the order block. This was it right here. Then they retrace where? Right back into the high of that 4-hour order block. They use it again. And then you have confluence not only on the left side of the chart, but you also have confluence here, right? This is also an order block on the right side of the chart. So then your mean threshold would be here. You would sell into that and look for the lows. Now to be aiming for New York low now. So we saw the exact same thing. Damn, it dumped again. We saw the exact same thing in US 30. So this is our 4-hour order block. Look, this was the body. This is what that order block looked like. And so where did it fail? Right here. You see how they break it? This is one of the strongest patterns you can find. They break it. Then look, they pull back up now. And look where they aim for. Boom, right at the high of that order block. And the reason for this is because this is how they're hedging positions. Like I said, it's just a position of structure. Now, we have high impact news and we have kind of the benefit of a clean week, but this happens all the time. It happened up here on the 1 minute, happened here on the 1 minute, happened here on the 1 minute. It's all just structure. But when you identify it on the 4-hour, it's a lot easier to be able to maneuver around that structure and aim for liquidity. Man, I could go on all day. So, does anyone have any questions at all?